Guys, I am so excited for every single person watching this lesson right now at this moment, as we are going to be going over the best breakout chart setups. Now, the reason why this is so exciting and the reason why this is so great is because, number one, I know everyone always wants to find the best, biggest breakout chart setups. I understand that. But at the same time, guys, number two is we have to learn the enemy. If I was a hacker, okay, one of my friends, he does some hacking things. He went to school for it. And I used to always ask him, oh, can you hack into this? Can you hack into that? And one of the classes that he took is that someone is going to hack against him and he has to block it. And then they would switch around and then he would become the hacker and someone else would have to block it. So basically, you learned both sides. You learned defense and you also learned offense as a hacker to be able to have cybersecurity, to be able to figure out how to be able to stop upcoming approaches and inclusions and all these things that we are trying to have cybersecurity against. So we are trying to do the same exact thing as a shorter. As a shorter, someone who bets that the stocks are going to fall, someone who bets that we are going to start fading and falling. Like today, I was able to make over $600 just by betting that a stock was going to fall. I want to be able to figure out, how do stocks break out upwards? If I know how stocks fall, that's great. I can play offense. But I also need to play defense, because if I am betting that a stock is going to fall and a stock goes up the sky high, I want to be able to say to myself, okay, hey, I should have gotten out of this play. Oh, I'm recognizing this pattern. Ooh, let me get out of this and maybe even switch to the long side. Remember, stock trading, you always have money available. Money on the upside, money on the downside. We just can't make money when stocks are moving sideways. So, what do we always need to represent here is we need to understand about U-shapes and triangles. U-shapes and triangles is what is going to bring in breakouts. It's what brings in momentum. It brings in action. So our eyes, I want you to start training your eyes to start looking for U-shapes and triangles at all times. You might say U-shapes and triangles. What does that really mean? I mean exactly as it sounds. I want to be looking for wedges and I want to be looking for breaks of resistance. So simply enough, this is how it works. When we have a triangle, I am not referring to this triangle. I want you to turn this triangle sideways and refer to this triangle. And what this would be as if we had a stock that was moving up, moving up, moving up, and we find resistance, find support, find resistance, find support, find resistance, find support. In these triangles is where we squeeze and get big time breakouts. Triangles are great for crunching in volume into a very tight little area to lead to that big explosion and lead to that breakout up towards new highs. That is what is so incredible about looking and realizing where these triangles form, is that's where it comes on out in the corner of these triangles. And we're going to dive into a lot of details on this. Now, at the same time, we want to be looking for U-shapes. And now what I mean by U-shapes is we are going to have the U-shape establish resistance. So if we had a stock moving itself on up, we have a stock coming on up, we hit this price of, let's say, $5. Now we U-shape back up to $5, and now this is the break of resistance. You need to realize right now that breakouts happen from a break of resistance. If that is from a break of resistance on a downtrend, if that is from a break of resistance from a horizontal line, if that's a break of resistance from a 200-day moving average. But the more we test resistance, if that's here on the U-shape or if that's on the triangle, the better the explosion is going to be. The longer a rule is in place, the bigger effect when that rule is broken. And what I mean by that is if we hit $5 once or hit $5 twice or hit $5 three times, four times, and then we break $5, we usually get a very strong reaction. Let's just think about it in any sort of rule ever. Let's imagine if you lived in a society where there was, a banana, right? A big banana tree. And basically everyone in the community says, no one eat that banana. No one eat from that banana tree. And it goes through hundreds of thousands of years where no one eats from that banana tree. But then all of a sudden someone goes, I want to eat from that banana tree. Well, guess what happens? There's a very big reaction. There's a big outpour. There's a lot of angry people that live in that society that says, we do not eat from that banana tree. The same exact thing is going to be happening as in, let's say, our emotions with stock trading. If we hit a resistance line and we get rejected, and we hit a resistance line and we get rejected, and we hit a resistance line and we get rejected, when we break that resistance line, there's a big kind of, oh wow, what is going on here? And that is where we see a lot of buying volume start moving on in as we are breaking into new boundaries. So let's go ahead and let's talk about some of these go-to patterns. And as these patterns are developing, as these patterns are setting themselves on up, let's see if we can find U-shapes and triangles on them. Okay? So what I want to be talking about here first is I want to be talking about the $1 breakout. This is very simple, very easy. When we break the price of $1, we tend to see very strong spikes. So the criteria for the $1 breakout is we always want to have a low float. If you guys know me, I always look for stocks that have low floats. I am looking for plays. I am looking for stocks that have less than 5 million in float. So if I see a stock that has under 5 million in float, those are going to be plays that are going to have rapid movement. We're going to see crazy action. So really the way that you can think about this on all plays, guys, is 5 million in float and under is going to be the best chance of you seeing a big time breakout. The float, for those who do not know, are the shares available to the public. So where can you see float? Little heads on up here, traders. You guys can see float over on my scanners right here. 14 million, 94 million, 3 million, 5 million. You guys can go over to Yahoo Finance. You guys can take a look at float. Let's say this is, SPCE right here. I can click statistics at this moment. Click statistics and you guys can see float right here, 378 million. The float are the shares offered to the public. The lower the float, the higher the demand, the bigger the spike. So when we have a lot of volume and we have a very low float, that is when we're going to have a monster spike behind it that's going to lead towards the biggest breakouts, the biggest runs, the biggest rips, and the biggest climbs. So let's make sure that we dive into this and we understand this even more. So anything underneath 5 million is where we are going to have monster opportunities for breakouts. Anything between 6 million to about 15 million in float is going to be solid, right? It's like we could see some breakouts, but it's not going to be anything insane. And then on top of that, guys, anything probably, between 15 to 30 million is kind of like my pushing my limits. This is where I will be getting involved, but it's not going to be okay. It's not going to be crazy. So this is going to be average. And then usually anything above 30 million, I don't even trade it. Like I don't even trade stocks that are above 30 million if I'm, let's say, looking for these smaller micro cap breakout plays. You will realize that these plays are always the best. Okay? So underneath 5 million in float, very important. The $1 breakout pattern we only look at on the daily chart. Needs to be under $1 for at least 3 months prior and must be a top gainer on the day. Now traders, let's think about this. Why does this stock need to be under $1 for at least 3 months? Because underneath $1 for 3 months, just like I talked about before, the longer that we have a rule established, when we break that rule, such as we don't go above $1, that is where a ton of action happens, where a ton of excitement happens, where a ton of people start saying, whoa, we just broke through this area, right? We broke through this mark. Imagine if we are in a prison cell and we are sitting there and every single day we throw again a ball against the wall. We're throwing it and we throw it and we throw it. And we throw it day 1, day 2, day 3, day 4, day 10, day 100. And all of a sudden we throw a ball and that wall breaks. Guys, how would you feel if after 5 years of being in a prison cell trying to break out by throwing a ball against the wall, after 5 years all of a sudden a couple bricks start falling? How would your emotions feel? How would you, again, your psychological mind feel? It would be like, oh my goodness, it's happening. So the thing is, when we break that rule, we start seeing a ton of excitement. We start seeing a ton of action in the market. Must be a top gainer. Well, why would it must be a top gainer? Because we want to see plays that have volume behind it, that have attention behind it, where we are saying to ourselves, wow, okay, this is a top gainer at this time. This play already has attention. And now we're breaking the rule. That's going to bring in even more attention. And it has a low float. Oh my goodness, we could see a monster spike. So what do we have right here? AVGR. Notice AVGR at this time could not get above the price of $1. Notice monthly. We are underneath this for how many months? So many months we're underneath the $1 price. So when we break through $1, take a look at the reaction that we have. Traders, take a look at this. GNUS. Notice underneath $1, underneath $1, underneath $1 for months. And we break $1. Notice the reaction that we have. We are doing something that we have never done before. So guess what? People get excited. We're breaking out of that sell where all of a sudden our emotions are sky high after breaking that $1 mark. So it's pretty crazy to realize how big these spikes can happen, how big these plays can happen, right? You know, this is pretty fantastic to be able to realize here, and this is what's so great about the $1 breakout. So if you are ever looking at a play and you were thinking about shorting the stock, and when a stock all of a sudden starts coming on up towards the price of $1, and you notice that has not been above $1 for months, and all of a sudden you're above $1, is it a good idea to hold your short? No, it's better to get out, move on, and even go on that $1 side. Next on up, team, is going to be the fan favorite, which is going to be our U-shape, right? We want to be looking for the U-shape breakout here. So the U-shape breakout, what is so great about this? Well, guys, we want to look for a low float. Could be on any time frame. We do want it to be a top gainer on the day, and that would be from large volume, and we watch for a break of resistance in a U-shaped setup. So basically, traders, what is the idea here? Same exact thing as we talked about before. We want to establish resistance and we want to break resistance. So when I take a look at a play, I want to be saying to myself, I want to look for a stock that opens up at the start of the day and spikes very hard. Then I want to hit a strong resistance line. Hypothetically, or for an example, $5. After it hits $5, let's see a pullback. But then when we come back up to $5, now we know that this is our strong resistance line. If $5 is where everyone sold off last time, a lot of people are probably going to look to sell it off this time. But if we break through this wall, guess what happens? We start seeing a very big breakout. So we spike, this brings in volume. Then again, we establish resistance, we U-shape, and then break resistance as we go on up. When we have a low float, we break that U-shape on again, let's say on today. It can be on the time frame as in like today's top gainer. That brings in a lot of hype. So for instance, CDXC here. CDXC goes on a spike. We establish resistance. We U-shape around. We break resistance. More buying volume comes on through. And then we get our next leg on up. So that's very nice to be able to see here. That's very nice to be able to see this happen. It's very nice to be able to see these breakouts here. Now the next one is going to be like a very close cousin to the U-shaped breakout pattern. And that is going to be the red to green move. So what we have right here, guys, is going to be the red to green. Now, traders, if you look up red to green, you are going to realize that a lot of times traders are going to say the red to green move is when you gap down underneath the previous close and then you break the previous close, going from red from yesterday to now green on the day. That does work, but I honestly think this works a little bit better. Where essentially, what do we have? We are going to be having the same exact setup as we just had on the U-shape, which means we want to establish resistance, but at the same time, we are going to fall, break, go on a big rip and run, but we don't have that initial run up. We don't have that initial spike. So how can we have a lot of volume at the start of the day when we don't have a large gap up? When we don't have a large spike? Well, basically, as I just gave the answer, we are going to have a large gap up or a previous top gainer. So when I call a red to green move is I am saying that a red to green move, guys, is going to be when we have a previous top gainer. Like this stock was all the way up at $7.50. So a lot of people are looking at it because it was like a 100% top gainer of yesterday. So we opened up the day right here at around $5.75. It dropped at the start of the day, showing that this one may collapse all day. But then guess what happened? It then broke through $5.75. And after it broke through $5.75, boom, here's the breakout. So you can see the U-shape, same exact thing as we taught right here, only this was from a morning spike that brought in volume. This was from the previous day that brought in all the volume. Well, what about this red to green move? This red to green move right here, team, right? Boom, U-shape, boom. How did this happen? How did we get a nice red to green move right here? Well, this was a top gainer in pre-market. So we did have our U-shaped breakout, which was a morning spiker, established resistance, U-shaped and then broke on out. We had a red to green move, which was a previous top gainer, which dropped at the start of the day, but had a lot of volume because it spiked so big yesterday. And now we have CATB right here, where this one has a lot of volume at the start of the day because it's a big pre-market top gainer. Okay, so that's very nice to see. That's really awesome. So these are going to be some of our go-to U-shaped patterns where we are looking for, again, those breakouts on U-shapes or red to green moves, and sometimes, again, even that $1 breakout pattern. So I want you guys writing these down, and I want you guys studying these so that you guys can realize, oh wow, we can see these patterns happen and develop. And I do want to check out today when we're done going through these patterns to see if there's any patterns that we can find on today's charts that we can correlate them to what we just learned. Now, next thing that we want to be going over to, guys, is triangles. Now, triangles is not about establishing resistance. Remember, guys, we just talked about running on up, establishing resistance, then breaking resistance to get that next leg. That's not what we're referring to here. Triangles is all about the squeeze, baby. So squeeze is the key word when we talk about triangles. And triangles is going to be when we have a nice morning spike, which is going to, again, bring in that top gainer, bring in a lot of volume. Morning spikes happen with low floats. And then we want to be looking for consolidation. Consolidation, where we have a pullback, then we have a move back on up. A pullback and a move back on up. A pullback and a move back on up. Pullback, move back on up. But what do you guys realize about this? You guys are probably realizing at this moment that every little pullback is a little bit higher than the last one. And every single time it drops, we don't get as high as the previous one. And now guess what's happening, team? We are leading towards all of this volume getting into this little tiny point where eventually, guess what happens? We either see a big collapse all the way back on down, or we see a massive explosion all the way towards the upside. So the best way to honestly think about this, traders, is that what we have at this time is we have this huge river, right? Or let's say this huge lake, okay? When you have a big lake, it's very calm, right? You can swim in the lake. You can have fun. You can, again, have a boat, and you can be able to kayak or be able to sailboat in the lake. You can be able to, again, ride a jet ski, right? I don't know how good this art's going to be. You know, there you go, riding a jet ski, and, you know, the jet ski, you're ripping and running, you're enjoying life, everything's great. But then, of course, what happens at the bottom of the river? Well, the river funnels into a little tiny area. And this is going to turn into a probably whitewater rapids. If we have, let's say, 1,000,000 gallons of water. We have 1,000,000 gallons of water right here. And all of this millions of gallons of water funnels into this little tiny area. Well, now guess what happens? You have all this whitewater rapids. Everything's going crazy in here because you have all of this big volume of water go into this little area. This is the same exact thing that's happening on bull flags. We have all of these traders going inside this little tiny area. So guess what happens? It leads to this explosion where we are saying to ourselves, wow, we have this monster spike and now we have this triangle. And this triangle is leading towards this great squeeze and pop. But notice, we had a morning spike, brought in volume. We had consolidation, lower highs, higher lows, triangle, explosion. Look how great that was. Now, traders, you guys help me find something. Can you guys realize something else that may be going on right here? Does anyone else realize that, hey, Deck, I actually see a U-shaped pattern. We established resistance right here. We U-shaped on around. And then another big breakout happened right here. Does anyone see that? Whoa. So you're telling me we just had a triangle, and then on top of that, we also had a U-shape? Absolutely. What about here? Big morning spike got the attention. Consolidation, very big breakout. Now, do you guys realize also a couple upper shadows right here indicating that we are on the top? That's where we can go ahead and pull the trigger on the short side. Pretty neat. Take a look right here. Very big spike. Triangle starts forming. Then, of course, the big time spikes start happening right there. So that is awesome. So we are realizing that over on these plays, when these bull flag happens, we can see that explosion towards the upside, which is going to be very nice. Let's go over to a next kind of cousin, sibling of the bull flag patterns. And this is going to be the ascending triangle pattern. So as you guys can imagine, what does ascending mean? Well, ascending means going up. When we are ascending, we are going up in elevation. And ascending is all going to be about exactly that, moving ourselves on up. Now, for those who do not know, one of the best ways to know that a stock is going to be breaking on out is when we build higher lows. So you guys tell me right now, which pattern is the higher low pattern? Is this the higher low pattern? Is that the higher low pattern? Let's go to the next one. Is this the higher low pattern? Or is this the higher low pattern? Which color? Which color? The higher low pattern is going to always be great when you guys see higher lows. Higher lows is right here. We have one low, we have another low, we have another low, we have another low. But every low is higher than the last low. So basically what we have going on here is even when we have pullbacks, we have strength. That's great to be able to see. Even when we have pullbacks, we still have strength. Even when we're not doing well, we are still good. Imagine, let's say, think about this as, a golfer, okay? Imagine you are golfing against someone and you say, hey, let's put $100 on this and let's see whoever wins. I would think about a higher low golfer as basically someone who plays great. But even when they miss, they're missing very small. Imagine your miss is you shank it into the woods. That's your miss. Their miss is that they, again, were just a little short. They're still in play. They're still doing great. They just didn't have the right distance. But that's their miss. Even their miss is still great. And that's what a higher low pattern is. We are building higher lows, which shows that buyers are still clearly in control until what happens? Until we squeeze and break out. So we are going to have a low float. Could be in any time frame, corner of the triangles when we break on out, but this is going to be a top gainer and a stock that builds higher lows in a triangle. So what do we have here, team? As you guys can imagine, we are establishing resistance. We touch resistance. Corner of the triangle is where we get our breakout, but the higher lows are the dead giveaway that we are going to be spiking towards the upside. You guys can see right here. You guys see triangle, 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 top resistance. Here's again our higher low. As we get to the corner, bada boom, there's our dead breakout. There's our dead giveaway. Here we can have SKLN. Very big spike, very big rip, establish a resistance, 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 higher lows, get to the corner, boom, there's the big breakout. So that's where we want to be looking over on these plays. That's where we want to be seeing these very big spikes, these very big rips, and these very big runs from these triangles. Now, traders, let's move on to another one. Let's look on to honestly one of my favorite go-to plays, one that probably all of you guys know because I talk about it a lot. And this is going to be one of my favorites. This is going to be the mid-candle breakout pattern, baby. Drum roll. So mid-candle breakout pattern. This is going to be one of my favorite go-to patterns. And the mid-candle breakout pattern, yes, we want a low float. This is crucial though. A previous top gainer. The stock is going to give back half of its gains from the previous day and then go on a big rip and run. So let's explain this. Let's talk about what happens here. This will only happen on big previous top gainers. So we will have day one. Day one, we will have a stock go on a monster spike. Okay? Now, this could be a 200, 500, 600% move. Let's just say a 500% spike. I'm talking about like a supernova, a stock that has now gone from the price of $5 all the way up towards $35. I'm talking about a very big move right here. Okay? Now, let's see what happens next. If a stock goes from $5 to $35, what do you think it usually happens? Well, guys, traders usually take profits. They usually say to themselves, man, I'm taking some gains. Or I'm going to short this play because it just went up so high, there's so much room to fall. So usually the stock is going to fade and fall and drop. Now, what happens here? What happens is since we had such a big spike, and now again, people are taking profits and people start shorting it, it usually comes down to such a great dip buy price that buyers now return to the play. And they start saying to themselves, wait a minute, This stock went from $5 to $35. People took profits and shorters brought it all the way back on down to the price of 15 bucks. Hey, guess what? I'm going to buy back in on it. And now other people buy back in on it, and it starts going on a very big spike now once again because it just squeezed out all the shorters. It squeezed out all the people that are going against it, which makes the stock go up even higher and adds more fuel to the fire. So when you see these plays here, you will realize monster spike on up. The next day, it drops on down. People take profits, people short. But then the next day, guess what happens? People start saying, let's squeeze out these shorters. And we start seeing a huge climb all the way up towards new highs. Take a look at this one. We have monster spike. We fall back down to halfway of that spike. And then buyers come flying on the third day where they start saying, okay, let's start squeezing back on up. Monster spike, falls back down to halfway, and you can see over a collection of the next few days, we start squeezing all the way back on up. Take a look at HMNY right here. Monster spike, took a couple days to fall back down to halfway, but then buyers come flying all the way back on in. So if you are shorting this play right here, you are going to realize, hey, I don't want to be in on this play. This is not a good time. This is not fun for me. This is where I'm saying to myself, man, I don't want to be involved over on this. So really, the way that this happens, traders, is you want to remember is we are going to realize, I'm just going to make this simple, top gainer on Monday. Top gainer on Monday, then usually turns into the biggest top loser on Tuesday, and then usually is back and winning. I was going to put it in gold, but I don't think you guys can see that. Back and winning over on Wednesday. So Monday we're up, and Wednesday we're up. Tuesday is, of course, the dropping day, where you start falling on down. Monday top gainer, Tuesday a big loser, Wednesday you start going on a big time spike. So really all you guys have to do over on this play is ask yourself and realize, hey, okay, you know what? What's the smartest way for me to be able to trade here? Let me write down all the top gainers every single day. So if you guys want to, just head on over towards head on over towards finviz.com, and every single night just write down the top gainers. Right? Write down the top gainers right here. Write down again all these plays. Monday's top gainers, STSS, INSM, PGY, LPA. Right? LPA is going on a great spike right now. LPA, this could turn into a mid-candle breakout pattern in the future, right? So maybe again, if this one falls on down to $16, $17, we could start moving ourselves back on up in the future here. Now, I was hoping this one to have a little bit more volume. You could see it's not really a top gainer as in hot top gainer plays. You know, I want to see a big spike and basically have as much volume as like GameStop, right? I want to see plays that have a lot of attention behind them. Those are the ones that I'm going to be able to make a lot of money on. So, traders, let's remember that. We'll go over some more examples coming on up here, but let's keep this party going because I think we're getting a lot of great value out of today. I think we're getting a lot of great value out of this lesson. Let's go on to another pattern. Going back over to the triangles, guys. We talked about the ascending triangle pattern. Now, what do you guys think we're going to talk about? The descending triangle pattern. Descending, right? Now, if we are descending, what does that mean? That means we are falling. Now, this one is very important to understand, okay? The reason why this is so important to understand, the reason why this is so crucial to us is because if you look for on a minute chart, 1 minute, 2 minute, 5 minute chart, and you see a play that's getting lower lows, that's going to lead towards a sell-off. The only way that this play works is on the daily chart. The daily chart is how this play is going to be successful for you. Not on a minute chart. Because if you're on a 5 minute chart and you see a play getting lower lows, that's where you're going to get a sell-off. What you guys have to do is look for it on a daily chart where you come all the way back on down after maybe a few weeks to maybe even after a few months and then say to yourself, okay, hey, I see the big squeeze. I see the big pop. I see the big move there. So you have to realize you have lower lows. Lower lows are usually very bad. Understand lower lows show weakness. But if we can find a bottom floor with lower lows on the daily chart, that's where buyers may eventually say, okay, I'm going to start moving back in on that play. Okay? So we wait for the corner. We wait for the closest area. We want to wait for these squeezes to happen. Now let's talk about these entries, guys, because these entries are so crucial. These entries are so important to us. These entries are going to make us and break us as stock traders. Guys, it's so simple for me to be able to stand up to you guys right here and right now and say, hey, everyone buying a U shape, everyone buying a triangle, everyone buying a $1 breakout, everyone buying a mid candle breakout, and bada boom, you guys will be millionaires. Okay, now that's it, right? I don't want to do that. I want to be able to actually teach you how to enter plays, because entering plays is much different than, of course, just seeing a play. So what we have to do here, team, is we actually have to learn the alphabet. All right, we have our A wall, B wall, C wall, and our D walls here. So we are actually going to break this on down, talk about this a little bit more, and make sure every single trader understands what we have here. So I want to make sure that we are all set, ready to rock, ready to get after it. Now, what we have at this time, traders, is when we're taking a look at this A wall, B wall, C wall, is we want to be able to break this all on down. So we do have, let's say, our entries. Let's go with the U shapes. All right, U shape patterns. First things first is we do have our A wall. Now, what is our A wall? Our A wall is going to be establishing resistance. So A is going to equal resistance, establishing where our first resistance is going to be at. Our B wall is going to be what? This is going to be the initial pullback. Okay, this is going to be our pullback. This is going to be our fade right here, which is going to start finding some support. So we are going to be B, which is going to be fade and start of support. Our C wall is always going to be the time that we actually want to start getting involved into it. This is when we are actually going to be starting to get our higher lows. So we are going to have C wall equals higher lows right here. And then last but not least, traders, our D is also going to be kind of in green as well, as that's going to be a great area to be able to get involved, as that is going to be our breakout. So you can see when we break through resistance, the D wall is going to be our breakout. So what I want you guys to realize is you guys can buy anywhere in C or D. If you guys buy in the higher lows before the breakout, that's absolutely fine. If you guys want to wait for the breakout on the D wall right here, that is absolutely fine as well. Let's just think about this. If I buy in at A, if I jump in right here at A, that's awful, because I'm buying in at the highest area possible and we have all this room to fall. If I buy in B, that's not good either, because we're building lower highs. We're fading, we're falling. There's a great chance that we could just fade on off and dump. That's not what we want to get involved in. What we do want to get involved in is we want to find higher lows. What we do want to get involved in is we want to find strength. So we always have strength in higher lows, and we always have strength in breakouts. That's where we want to be getting involved in. Now, let's just think about the C wall here for a second. Personally, I like getting involved in the C wall. Now, why do I like getting involved in the C wall for breakouts? Because it gives me time to be able to adjust to the play. So for instance, if I see that we have right here, let's just make this easy. Top resistance, guys, $5. Bottom support right here, $4.50. I realize that we're starting to bounce at $4.50, and I realize we're starting to move ourselves on up. Boom. I jump in right here at the price of $4.70. I'm in on. Now, guess what? I know that we have room to run back up towards the old resistance of $5. This right here could already put me in the profit, which is amazing. So even let's say worst case scenario, if the stock moves itself on up and then gets rejected, I could still make money because I bought down low on the C wall, right? So that's very nice to be able to see. Now at the same time, guys, if the stock does break on out, well, now I'm making the most amount of money possible as I got in super low. So when I do get in at lower entries and I get in at lower areas, there is more opportunity to profit. Because guess what? As I already stated, I could hit this area and we start falling on down. No worries. I get out and I still made a nice profit. But if it does break out even more, I can get out right here. And that's even better, as I can make even more profit. So the C wall really is the best entry. But at the same time, guys, the D wall is going to give us, or the D breakout is going to give us more clarity. When we see that we are breaking resistance and we're starting to move on up, I can buy here and I will see that the big volume is moving on in, and I can have more clarity that I am going to move on up and I am going to make money and I am going to be able to make profit. Right? So I want to make sure every single trader understands this, that you guys are going to be able to make money on the C wall and the D wall. avoid buying on A and avoid buying on B. Now let's delete all this and let's actually go over to triangles now, and let's start talking about triangles on where we could be able to get involved over on these plays. So remember, this whole entire lesson today, guys, is I'm a shorter. I like betting against companies. Today, awesome trade, $639 for anyone that's just joining us. I was able to make $639 over on STSS. And the reason why I was able to make this money is because I saw this upper shadow and I saw that this play was going to reverse. Traders, I did not see any breakout pattern over on this play. This is easy for me now. Right? If I don't see a breakout pattern, I see a big long upper shadow, and I see that the play is most likely going to fade and fall and start dropping, I can go ahead and be able to make some great money. $639. But what if I jump in on a play and all of a sudden it starts going against me? What if I jump in on a short and I start realizing, oh wow, a pattern is a U-shape, a triangle, a mid-candle breakout pattern, a descending triangle pattern, a $1 breakout. Now I can say, let me get out and take as small as loss possible. Stock trading is not all about winning. It's about managing losses as well. If I can manage my losses, I can be a very successful stock trader, and that's what it comes on down to. So traders, let's go ahead and let's look at triangles now. So when I take a look over on triangles over on this play, we are still looking for that same exact thing. We have that initial run up. Once that initial run up touches that top area, we have a pullback. There's your A. A is resistance. That's establishing our resistance right here. That could be the price of $10. Then, of course, we start doing what? We have our pullback. We have our pullback right here. That is going to be B, right? So we have our A, we have our B right here. Then guess what we start seeing? Well, we finally start seeing, okay, hey, we just started moving on up. Now again, we establish resistance again. We hit this resistance. A lot of times when we build higher lows, it's not going to be on a U shape. It's going to be a little bit more sharp, right? And that's going to give us an idea that we're going to start building these higher lows. The moment that we see the second higher low form, right here, here's a higher low, here's a higher low. This is now our C, where we are essentially saying to ourselves, okay, this is all opportunity for us to be able to profit. This is all opportunity for us to be able to profit as we are building higher lows within the play. And then as we get to the corner, as you guys may realize, the corner is going to be D, where we do get that breakout and that next leg on up. So where can we buy it on a triangle? We don't want to buy at the very tippity top. We don't want to buy when we get our pullback. We want to buy after we establish resistance and after we form higher lows. After we have these higher lows forming, after, of course, we jump in, it's better to jump in on C, but if you want to wait for that D right here as well, that's where we get the breakout, that's where we get our next leg on up. So where can we enter? You guys already know, we can enter right here, we can enter right here. We are avoiding entering right here, we're avoiding entering right here. We want to jump in on the higher lows or the corner of the squeeze to get that break and get that spike. So team, that's what I want you guys to gauge. That's what I want you guys to understand. That's what I want you guys to realize about these plays here. Now traders, let's go ahead and just take a look at today. Okay, can we do that? Because I know, again, sometimes people teach you things, but I want you guys to ask yourself, are they teaching me things out of textbooks that, we really never see? Or are these things actually relevant for today? Well, let's look at the number one top gainer of today. I see the pattern. Can anyone see the pattern that STSS was able to bring us for this big time breakout? All right, let's take a look. Let's go off the daily chart right here, or excuse me, the 2-minute chart of today. Does anyone see? Well, I'm going to start very early, very fresh here. Right at the beginning of pre-market, we had a very big morning spike, didn't we? Now, after this morning spike, in pre-market, what did we form? Traders, didn't we spike on up, establish resistance, form a big U-shaped pattern, and then break out of that? Would you guys not say that this is spike, huge U-shaped pattern, then we got a breakout? Would you guys not say that? And then, of course, we came on down, we bounced. Now let's turn off pre-market for a second. Turn off pre-market here for a moment. What do you guys realize? Isn't this another U-shaped pattern right here? This big red to green move? Didn't we open up extremely high? And I'll even turn off post-market so you guys can see it as well. Didn't we open up right here extremely high from the previous day, so we already have a lot of volume? And didn't we U-shape right here? And didn't this U-shape pattern just lead to a very big spike towards the upside? So you're telling me, just taking a look over on today alone on the number one top gainer of the day, because patterns happen on the top gainer, I can already see that we had a big time spike, established A, B, C, D, U-shaped pattern. Here's the nice breakout. Then we have again opening up at the start, opening on up, top gainer right at the start, drop on down, U-shape back on up, A, B, C, D, big time breakout. Then of course, me personally, I jumped in on this play after upper shadow, coming on up towards the old spike. I made again my $639 on the downside. But I didn't jump in early because I didn't want to get caught up on that, play towards the upside. So I waited and then made money on the downside. But because I know these patterns, I'm able to say to myself, okay, I don't have to get caught up in a short squeeze. I don't need to lose on these plays. I don't need to be a person that's going to end up, losing. I could be a person that says, okay, let me be smarter here. All right, this one, PEGY, number 2 top gainer here. And this is a play that's not a perfect U-shape in any way, but we do have a spike, drop on down, U-shape, very nice rip and run towards the upside. Right, so that would be something I would definitely say keep your eyes peeled on. It could be consistently watching and be aware of over on this time. Right, you could even take a look over on POAI right now. It's a little bit later in the day, so just definitely be careful. But if we again turn off pre-market at this moment, can you guys see very big spike? Establishes A, drop on down B, starting to work itself up on C right here. So even look at the top gainers right now, POAI. Don't we have a large gap up all the way up here? Guess what? Didn't we just establish A? Now we're starting to fall on down. That's B. Now again, as we start moving on up, C. This could be a great area for an entry as we see higher lows. Could take profits right here, but if we do get a breakout, there's D for that breakout to the next leg. So everything that I'm teaching you, it's all relevant to right now. It's all relevant to this exact moment. Right now it is 11:10, May 28th of 2024. So if you're saying, okay, hey, these patterns, these plays right here, are they going to stay relevant? Are they going to stay true? Guys, I've been using these same exact patterns, these same exact ideas, these same exact plays for as long as I can remember. Since I began stock trading, that's how long I've been using these patterns and using these plays. Okay? So I do want you guys to realize that these patterns and these plays and these ideas, they are not going to change. They have been the same patterns that I've been using for years and years and years. Deck, how long? Take a look at the patterns that I just showed you. Did anyone realize? Some of these screenshots that I have are from 2016. 2016, guys, I started putting some of these lessons together. And I just, say, hey, you know what? These are, again, great chart setups. 2016. Guess what? They're still available and the same exact things work now. So it's like, yes, as time changes, you have to adjust your strategy. But at the same time, some of these patterns never change. Traders, let me ask you guys something. When you guys were born back in 1990, 2000, 1970, if it snowed outside, what did you do? You put on a jacket, you put on a coat, you put on a hat, you went outside and shoveled. Cool. Just because, again, we're 20, 30, 50 years down the road, does that mean it's any different? If it snows outside right now, today, what are you doing? I'm putting on a jacket, grabbing my shovel, going outside and clearing off the driveway. Simple. Nothing's changed over that period. Sure, there's been different technology advancements. Sure, things have happened in the world since then. Sure, there's different current events. But the weather doesn't make you change. The weather, again, has been the same as it was when you were a kid to the same as it is right now. These patterns are the same exact thing. Patterns developed as a kid, patterns developed right now, they are still exactly the same and they work exactly the same way. So I want you guys to realize this and how important, how crucial these patterns are because they are going to make you a much better trader. Okay? So let's break this on down here. Just want to make sure that we're all set. All right, awesome. Now, guys, taking a look over on these scanners. As I said, every single day, I want you guys to challenge yourself. I want you to challenge yourself and I want you to look for patterns that led to breakouts, patterns that led to setups. Also, if you guys are part of Tradecaster.com, you guys already get all of my scans. So the thing is, our mid-candle breakout pattern right here, right? You guys all have this. All of our members, I literally gave it to you guys for joining us this month. So I gave you our mid-candle breakout scanner where it's going to give us those potential breakouts that are going to be coming up in the near future that have the very big spike, pullback, and get ready for that next leg. So it's hard to program to have very big spike, 40% retracement, and then next leg on up. But this does a good job of giving us some ideas of a very big spike, get that retracement, and get that next leg on up. Let's see if we can get like a really good, perfect one right now here. I get, what's going on with this, but there's no sort of massive breakouts. You can see like ZENNV, very nice spike, 40% retracement, might be getting that next leg on up. ONMD, very nice spike, getting some retracement, looking for that next leg on up. But what do we really need to remember? These are going to happen not on a $1 spike, $2 spikes. Mid-candle breakout patterns happen on $20 spikes, $50 spikes, huge, big rippers. So make sure you guys take that. From the lesson that I learned today, if you guys do have any questions, comments, concerns, please ask them. I will answer you. But other than that, I hope you guys are all set, ready to go. I hope you guys learned so much. You guys are enjoying it. You guys are passionate about stock trading and saying, wow, this is absolutely incredible. So great job. Want to keep this education going and making sure that you are growing every single day as a stock trader, doing your thing. Enjoy it, traders. Awesome job and awesome work. Team, can we get a good old Deckmart Trades? If you guys enjoyed today's lesson,